Chinese second quarter GDP growing at the slowest pace since 2020. That follows the COVID outbreaks, the lockdowns, the country's rolling zero COVID policy. Let's get to our chief Asia economics correspondent with the data and see whether there's anything under the hood that we can take cheer from. Enda.
It's a pretty downbeat set of numbers, Manus. Like you said, second quarter GDP growth 0.4%, much worse than expected, and that now cements the idea that the government has no chance of meeting its 5.5% growth target this year, something that's politically sensitive in itself. Now, we did have some high-frequency numbers for the month of June as well. That showed an ongoing slump in the real estate sector, and the property sector continues to worsen up to, and that accounts for maybe 20% of the overall economy size. And then on other parts of the economy, retail spending looked pretty good, actually, gained over 3% on the month. But again, people are saying you've got to factor in the impact of inflation there, especially on areas like petrol prices, for example, which is pushing up the overall retail sales number. So, something of a mixed bag on the data. You can argue that the economy is stabilizing. That surely wouldn't be hard, given that it's coming out of the major lockdown and restrictions that Shanghai was under for a couple of months there. But I think the bigger picture is still one of so many challenges and so many headwinds facing China's economy, not least from the real estate sector.
Yeah. Here's the thing, and I was looking at some of the market movers in the equity space, and I'm actually seeing quite a bit of inflows in some particular sector plays. Reasoning, at least that was some of the feedback we got, is there's a theory that you might get intervention/accommodation by the Chinese government authorities. What's likely to come? What kind of scale are we talking?
Well, this morning the central bank opted to, it didn't opt to add any extra money into the liquidity into the money markets, for example. Yusuf, that's an example that interest rates aren't a problem in China. There's plenty of liquidity around in the system. The problem is, A, the hangover from the real estate slump, and B, the ongoing sort of hangover from the aggressive restrictions to control COVID-0. And until either one of those changes, it's unlikely to see a major takeoff in China's economy. The government has been taking measures to ease up the property sector where they can, taking measures to stoke perhaps new home buying, for example. But COVID-0 is continuing. That will impact not just real estate practically. How can people go and view homes? How can people build homes under the threat of testing and quarantine? But it will continue to weigh, of course, on the whole consumer story as well. So, of course, there will be opportunities in the markets. People will always see those opportunities for value. But the bigger picture, I think, remains one of significant pressure on China's economy. And as I say, it's not going to be turning around in a V-shaped way anytime in the second half of this year.